Hi, everybody. Welcome back to the Comstock channel. I'm Marlon Bohling with you. I am welcoming aboard this time Mr. Eric Relph. He is with Comstock Investments, one of the regulars on our team here, and we get to talk markets here as they occurred on a Friday. We had the USDA cattle on feed report that came out after the close. We'll talk about that, and we had some weird market dynamics taking place here before we got to the end of the trading week. And of course, next week could be a barn burner as we look forward to the quarterly stocks report and the prospective plannings report as well. Don't forget to like this video and subscribe to this video and share it with others as well. Appreciate that. Eric, let's talk about the market forces at work on Friday. I want to start on the grains here for a second. Talk to me about the dichotomy that we had between soybeans and wheat. It's like they were doing this promenade thing here late in the week, trading places back and forth. What's up with that?
Yeah, well, I think you're seeing a little bit of spread trade amongst the larger, whether it be funds or commercials, whatever. Some of those trades are taking place, and you're seeing that have reverse impacts to those markets. Wheat's been kind of a whipping post whenever row crops are doing well, and vice versa. You know, when we had the Russia deal, we had some short row crops against some long wheat. Some of that spread goes on, so that's definitely going to have a little piece to play in that whole reaction. But all in all, I think the soybean strength 2 days ago was a bit unwarranted. You had some product strength, especially in the soybean oil, that was flashing some good signs. We were taking out some pretty significant technical resistance, and then you probably had some stop running above the market there that compounded a 10 and 12 cent gain into a 25 cent gain. So you saw some of that going on. And then today, profit taking, we take it all back. We drop back below the 50-day moving average, and we end the week on kind of a muted trade. And when you look back at the week as a whole, a lot of moving to go nowhere.
Well, yeah. And when you look at soybeans, do you still consider that chart to be stuck in an uptrending channel, though, even though it's testing the bottom side of it, or what?
Oh, for sure. Yeah. Yeah. There's definitely plenty of technical argument to say that we've seen the low in both corn and beans. Obviously, we're going to have to continue to see follow through. We can't get any surprise dips or pullbacks due to cooperative planning weather or a bad report next Thursday. Those things can just take all bets off the table, and then we're dealing with a complete different set of dynamics. But as of right now, the way the charts look, and in all row crops, all contracts, yes, upward trending channel, and looks like the lows are behind us for the time being.
Well, I wanted to ask you before we got any further, was there anything changing in the weather forecast for South American production?
Yeah, you're starting to see some wetter northern regions and some hotter, drier southern regions. The basically Mato Grosso is a dividing line. You've got everything in the northern half of the country is looking for substantial moisture, 3 to 8 inches in the 10-day outlook, notable moisture up there. Everything in the south completely dry. Now that bodes well for those in Rio Grande do Sul and Paraná that are either just starting or at least in the first third of their soybean harvesting. So that's going to allow them in the southern regions to continue their harvest progress on soybeans, but a lot of safrinha corn going in right behind that, and not really any moisture on the horizon for any of that in those southern regions. Now in the north, yeah, they could get some significant moisture and have a great start, but it's what's happening 30 and 60 days from now that make the big difference.
So if that's the case, and I did want to point out on corn and soybeans that I would say the last half hour of trade on Friday, the market's kind of tailed off on corn and soybeans. On the flip side, the last half hour of trade had a rally in the wheat. Kansas City, I believe, closed almost on the high of the day on Friday. Does that give you a different sense of direction for early next week now on the wheat trade? What do you think is driving that?
Yeah, so I've kind of been developing a bit of a theory here as I write broker comments every day for our afternoon Comstock report. One of the big things is you can almost tell what the U.S. market's going to do based on what Russia and France, that being Paris milling wheat and Russia's cash offers, are doing throughout the day over there. And of course, we're delayed. So it happens there. And then we get the trickle down over here. And so we start to see these movements during the day session here where they've already had them as we've gone through our overnight. And so that kind of led me to want to look at some continuation charts, particularly the Paris milling wheat versus the Chicago US SRW wheat. And so when we look at a monthly continuation chart on the Paris first, we can see that at the end of that, which is the past month, we've actually spiked down, made a low, tested a long-term trendline support that's been in place for about 8 years, and then rebounded from that low and are posting really nice gains for the month of March. With a little follow through over the next week, we might even have a reversal higher after that spike low to trendline support. So I took that and then wanted to translate it over to the Chicago monthly continuation chart. So I also wanted to bring up that graphic to say that it has not had the reversal. We have still been lower for the month of March, but we also went down, tested this significant trendline support going back 8 years again, just like the Paris. And you can see the spike in both of these charts when Russia invaded Ukraine. And now we've worked our way right back down to that trendline support. Hopefully that holds and wheat has a bright future, at least in the midterm here. Maybe that'll help the row crops along, particularly in the corn.
Well, now that we're getting further away from the winter, and it seemed like hostilities, even though they continued going on in the Black Sea region there, it looked like things maybe had quieted down just a tad. But now that things are warming up and we're getting into what we would consider the growing season, now hostilities are really ramping up.
Sure.
Lots of bombing taking place in Ukraine and also other areas in Eastern Europe, right along the Russian border there. And it makes it kind of a tenuous situation about how shipping is even going to take place now. Trying to get grain out of that area. It doesn't matter if you're talking Ukraine or Russia, does it?
Yeah, I mean, that's the way it seems to us as outsiders looking in. And when you hear about some of these things and the port of Odessa getting bombed, and you hear about this river port, the Danube River, and all these things happening, you know, we draw parallels in our minds. Okay, so we're thinking about the Mississippi River and the Gulf ports, and those are the things we visualize, and how much that would hinder our ability to export grain. And somehow they continue to get it done. And in a war-torn country, that being Ukraine, they're continuing to produce. I mean, granted, at smaller numbers, and if this thing escalates much further, then they're going to have to activate all able bodies, which is going to include farmers, which is going to reduce production further. So we have this whole dynamic that could play out if things go a certain way, and in what time frame. And so there's a lot of unknowns there, but it is amazing to me that everything they've been through, they've still been able to transport grain in some way or another, even as we're hearing about the EU sanctioning Russian products that they don't really buy anyway, but it looks good on paper and makes people feel warm and fuzzy. But this has just been amazing to me that they're continuing to move grain out of Ukraine.
Well, and you continue to hear more about EU farmer protests too.
Oh, sure.
In multiple countries over there, that they're not really letting up much, even with field work coming up.
I mean, you know a lot more than that. You've interviewed guys firsthand. You have a better pulse on that than I do, but it's crazy to me to think that you can have that many people sidelined for whatever reason, and that many transit routes destroyed for whatever reason, yet the grain still moves. China's still buying. They're still paying the insurance. They're still paying the elevated freight, and willing to go anywhere in the world except the U.S. to procure the grain that they need, no matter what the grain is.
Well, and the Red Sea is basically shut down. The Suez Canal isn't really carrying any grain cargo anymore. Granted, I think they only carry 14% of the world's grain shipping through that corridor, but it's something.
It's 14%.
You know,
right?
Look at the added expense of having to go all the way around Africa now.
Yeah. And we seem to still have no way to counteract that should give us a competitive edge, and it doesn't. And we're just, the only thing we've kept pace with USDA projections on so far, ironically, is wheat. Even though we've been hearing about all the Chinese cancellations and how wheat exports are, we're not competitive on the global market. Russia keeps fire selling wheat, all these things, but wheat is the one that we've been able to keep pace with. So maybe the USDA just had their sights set a little lower for wheat, but we are keeping pace at least with what they expected us to.
Well, let's talk about the other side of the coin now.
Yep.
We had the big report that came out after the markets closed on Friday. It would be the March cattle on feed report that came out. It looks like, far and away, the biggest number that leaps off the page would be the placements number. Let's talk about this when it came out. Give us a rundown of the numbers and how you look at them and how that may impact Monday's market now.
Yeah. So your trade expectations, you were looking for 100.8 on feed. We come in at 101. So they pretty well pegged that. Marketing number, they were looking for a 103.9. We come in at 103. A little bit of a miss, but not enough to really move the needle. Placement, they were looking for a 106, and we come in at a 110. That was a big miss. And I wonder, I wondered leading into this how the estimate was that low, because I thought 110 should probably be a little closer to reality. Because even if you just look at a normal February 23 versus February 24, you have one extra day in there to place. You also have one extra marketing day. So you expect the 103 marketing, that lines up with the extra day because of a leap year. And so if you, all things being equal, you should have placed 104. And that's before you consider the fact that you had cattle backed up from the month of January because nothing was moving because of holidays and blizzards and adverse conditions, cattle carrying tag. Nobody wants to deal with that. So they wait, clean it up, then start moving the cattle. Well, that didn't happen until the 20th of January. So then during the month of February, you were playing catch up. You had huge runs, Joplin Regional, OKC West, Oklahoma City, all of them running record runs every Monday, Wednesday for February. So huge numbers move through the month. So to see a 110, I was not surprised. And I think if you really dig into the numbers, it's going to come down to you had that extra day and you were just playing catch up from January. So is it a bearish number? Absolutely. That's bearish. When the market's looking for 106, you get a 110. But I guess I personally wasn't overly surprised because we did have so much catching up to do from those conditions that we saw in January.
Okay, the way the funds are set up, we all know they've been pretty much historically short on the grain.
Sure.
How are they positioned on the livestock side of things? And we kind of eased off. We flattened out and went sideways on the cattle market here the last couple of weeks. Has that kind of taken the edge off of any bearishness that was included in that report?
I think it has some of it. I mean, you plateaued and worked sideways. Today was a horrible day in the cattle complex. I mean, you had feeders down $3, fat cattle were down $1.50. That after you've plateaued for multiple weeks in virtually all contracts, granted at elevated levels, but at least you've leveled off and you're not continuing to shoot the moon. And so you've already given some reprieve to some of the oscillators. Your RSI and stochastics have backed off. You're not in extreme overbought conditions. Funds have eliminated what would be an excessive long position in some of these markets. They're still long, but they've eliminated what would be the excess of those positions. And you still had short-term longs that were carrying some pretty good profit that backed off and took profit today. I think that was most of the weakness. They just didn't want to carry those positions into this report. Turns out it was a bearish report. So I guess I'm not too surprised by the weakness today leading in. I would be surprised if we saw more than a day or two of follow through selling because I think most of this was dialed in.
Most of the bearishness seemed to be in all the deferred contracts. Why?
Well, the front's tied to cash, and cash has been amazing this week. The feeder cattle cash has been stout throughout. I mean, we've seen record high index levels in both the real-time index and CME cash feeder cattle index. So you're setting record highs there, which means sale barn action is extremely strong. Feeder cattle are bringing big money. Fat cattle needed to do the same at record high box beef prices as well. So, you know, the cash cattle trade this week, you had live prices in the South, 188 predominantly, moving big numbers. I mean, you moved almost 8,000 head in Texas on a negotiated basis, almost 20,000 in Kansas, over 20,000 in Iowa, 18,000 in Nebraska. And that was all just on Thursday. Those are big numbers in the negotiated market that hardly exists anymore because so many things are done on grid or on AMAs, alternative marketing agreements with the packers. So to see those kind of numbers at an average, I'm going to call it, of $3 higher than last week's weighted average, just exceptional cash. So the front months, they're going to stay strong because the cash is still strong and they're tied to that.
Okay, I'm just curious. This is a little aside here, but I have talked with you off and on here over recent weeks. Is this a case, and I know you work with this a lot with the LRP insurance. Is
Uh,
this a case where that would really pay off for the folks that have had it?
so anybody that's put LRP on in the last month and a half is very glad that they have it, even though we've been making highs, because it just, when you're record high in all these things, we had record high negotiated cash trade yesterday. We have record high feeder cattle index levels currently. Although we backed off a little today, but I'm talking this week, right? You're dealing with the highest numbers you've ever seen, ever. To have no protection under that with the amount of investment that's required today, the capital intensiveness is just so far beyond anything we've ever seen.
The return has been pretty good for how long now? Maybe 2, 3 weeks or more
The return.
on the LRP. I mean, where it has really helped to
Oh,
recoup some of that money.
so LRP works in a little longer term picture than that. But let's rewind. Go back to last fall, November, December. Anybody who had LRP on at that time hit it great. If they were putting it on at that time, you have end dates in that 13 to 20 week time frame. Um, they cashed huge checks. And obviously the cattle brought less, but that's why we had the insurance in place. If we're buying insurance today, we're protecting the highest prices we've ever seen. And if the market continues to go up, great. We're going to sell the highest priced cattle we've ever seen. If it does correct and breaks pretty hard, we're going to be cashing some big checks again.
Well, I know when I was grain farming, I always had crop insurance all the time.
Always. Yep.
And, the banker kind of insisted on that back then.
Yeah.
In this case, it seems like kind of a non-brainer, a no-brainer. Tell you what, if you don't mind, maybe in the future, maybe we can talk a little about that and explain to our viewers just how the mechanics of this thing work. Because I'm a little foggy on it, I'll admit. It's fairly new to some people.
Yeah.
And maybe we can work on a little series or something and introduce people to this, how it actually works, and maybe give some examples or something if you're game for that.
Yeah, absolutely. I think educating people is going to be the biggest deal here. And like you just said, once you understand the ins and outs of it, it really
All
is
right. Well,
a great tool.
let's kind of plan on that then, and we'll do something here in the near future. In the meantime, lean hogs, they held together relatively well.
Yeah. Cutout values were nicely higher at midday. I don't know if we'll hold that to the close, although those numbers are probably out by now. They weren't before I walked into the studio here. So we'll see kind of what the finish on the cutouts was, but cutouts were really good. Cash market held up pretty well this week, although lower. It wasn't a lot lower. And packers were fairly aggressive in procurement efforts. They did back off today. You didn't see a lot of cash trade today. What there was just kind of ho-hum. So as long as that cash market keeps working its way up, then maybe these low hundreds, 102, 103 in the summer months are not a line, and we can keep the thing moving.
Well, next week is the big planted acreage report from USDA.
Yeah.
That ought to be fun. Could be a big market mover out there. I'm hearing there's all kinds of guesses out there floating around already. What do you hear?
Yeah. I've got a handful in hand already, and we should have what they call the average of the analyst guests available by Tuesday or so. That report will come out Thursday at 11 o'clock, along with the quarterly grain stocks report. And right now, of the handful that I have seen, and I've got half a dozen or so, we're looking at 92.25 million acres on corn and just over 86 million on beans. I have talked to some private analysts who have research firms and things of that nature who are thinking the corn number may be too high because of current market conditions. But I-state corn growers love growing corn, and we'll see what wins out. Is it going to be chasing markets, or is it going to be sticking to rotations and tradition? I will say that in a lot of the fringe areas throughout the plain states and in the Mid-South, I would expect other crops besides corn and soybeans to be taking acres, particularly milo in the plains. And then we'll kind of see how things pencil in the South.
Yeah, I hear there could be a big increase in cotton this year in the South.
Yeah, I mean, new crop cotton prices aren't great, but nothing pencils a profit from current levels. So I don't know what's going to win out here. No matter what you're doing, you're betting on the come. So maybe everybody will get in the cattle market.
Well, well, I enjoyed talking with you. And anyway, we'll gear up for next Thursday's report. I guess that'll be coming out on March 28th at noon Eastern time, 11 o'clock Central. And I'm sure we'll have full coverage right here to analyze the fallout after that report comes out. It's in the middle of the trading day. I kind of personally wish we'd go back to the old days when all this stuff came out at 7:30 in the morning before the markets open. But it is what it is, and we'll have to deal with it. But brace up and get prepared for that. Eric, I see you're a little bit a walking wounded person there today. You might let our viewers know if you're okay or not.
Oh yeah. Just had to have my shoulder knifed up a little bit, but hopefully be improved, new and improved version in a few months here. So we'll see how the recovery goes.
All right. Well, thanks again for joining us. I'll let you rest up then, and you have a good weekend.
All right,
Eric
Marlon,
Relph with us. He is with Comstock Investments. That'll do it for this episode. For the one and only Brianne Hendrickson, our producer, I'm Marlon Bohling. Catch you next time on the Comstock channel. Thanks for joining us on our Comstock YouTube channel. Don't forget, you can also find us on Facebook and TikTok as well.